Good morning, everyone. How are you guys this fine Monday morning? I seem to be having a little bit of issue with my NASDAQ data. Hold on a second here. I think it's just the NQ, or is it? No, my other charts are rolling. At least my soybean charts are. I can't figure out what's wrong with my connection here. Hold on a second. Let's try the YM. See if that's moving. I do have the right contract month, don't I? Sure I do. See, I've got no data coming in. My Geiger counter's a dead giveaway. If that wasn't enough, of course, the charts aren't moving. Right now, the only chart I think I have that's moving is soybeans. Hold on a second here. Okay, I'm going to try shutting down my NinjaTrader and restarting it. That's about the only thing I haven't tried yet. So I'm going to disappear here for a few moments. Please bear with me, and hopefully we'll be able to get this problem resolved. All right, you guys, I'll be right back. Okay, I think that seems to have solved the problem. We'll just load the trade manager back up on here. I was starting to get worried there for a moment. I thought I have to put in a phone call to the broker. What's going on here? I knew it wasn't totally gone because for whatever reason my soybean charts were tracking. Computers, they're great when they work. Well, that's one way to avoid trading opening range. All right, so let's just go through here. This is the YM now. Maybe we'll look at the YM today instead of the NQ. They're going to move more or less the same way anyhow. All right, so let's see where the YM has been in the overnight. Start here with the Raptor. And there we go. All right, so a little bit of a run up. This, of course, where the market closed last week. And the European session opens right around here, the London Open, and a nice little rally. Nice little breakout to the upside. A wider bar here suggesting there was some buying pressure along with that rally. And here we are. We've made a little bit of a retracement back into this whole area of support. So we've got our test and retest type phase. Here's the market coming out of here now. This is actually what you might consider a test of the extreme and a possible failure. All right. So just trying to get my bearings here. Jim says the advanced decline, 2,000 buyers, about 600 sellers. So fairly positive on the advanced decline, about 1,400. Looking at a possible trend change here on the Falcon now. What time is it? Oh, we're about 10 minutes into the session. All right. We have a red bar buy signal here, which we could set up for the failure. So we could look to sell it down here on the, if this market collapses. and gets back down below these lows. Now we've got a kind of a double tap on these lows here on the hawk, and we're starting to print some yellow bars. But this is promising in that we can cover the trade above the high, and I think what I'm going to do is, if we engage the signal, I may try to leave this on as a runner, seeing how I've only got the one contract in play. Now the red bar buy, which is a weak buy signal, you can always use that simply as an early warning, because if this market does turn lower, there's a very good chance we're going to get a first micro macro cross signal, which of course is a higher probability signal. I think the Falcon is also turning over. Come on, Falcon. There we go. And you can see we're kind of flirting here with the primary resistance, and we're coming back with our trend change signal. This is one where you see how these bars are getting kind of thin. We had a lot of participation right here at this support level. See the width of the bars? We don't always know whether it's buyers or sellers, but we know there's a lot of participation. If we get a wide bar like this on a breakout, we know there's obviously more selling going on. That's the nice thing about these equivolume bars, is it gives you a feel for market participation at certain prices. Okay, so our trend line has flip-flopped again, so we can clear that setup, and we can probably cancel this order also. Eagle is starting to look a little bit stronger. See, we're getting a little bit of a hard edge bounce here. Market with a slightly bullish flavor. Jim is asking, Eric, can you change the echo bars to make them thicker? Well, here's the deal with the equivolume bars, is they always plot volume relative to the rest of the bars. So they've made a short answer, yes, you can put fewer bars on your screen. I know some of these little toothpicks here look a little bit on the thin side, but I can mention it to Adam and he can have the programmers adjust the baseline to make them a little thicker overall if they still seem too thin to you. But with your control button and your up-down arrows, you can change the spacing of your chart, which will slightly enhance the thickness of the bar. Okay. Oh, shoot. I was on the lookout for this hard edge bounce here on the Eagle, and it got away on me. And what's wrong now with my trade forecaster? Oh my goodness, I'm having all kinds of things going on this morning. Okay, trade forecaster says I need more days. No, I got lots in there. All right, we'll put you back. All right, well, I'll deal with that later. I was watching this hard edge bounce. It was followed on the heels of this red bar buy, which we know to be a pretty reliable signal. That red bar buy, I think, might be at our profit objective already. Oh, awfully close. But the hard edge bounce here was a second chance to get in on this trade. Now, whether you took it at the hash mark or on the ATR flip, either way, I think you're going to be all right. Say we took it on the flip, covered it to here. We got a little ways to go before we can do anything with that trade. Perhaps adjust the stops somewhat, but yeah, darn it, I was fixing my charts. So first micro macro cross here also, following that red bar buy. I'm sure we'll get another chance. All right, still kind of hanging in here a little bit. Looking now for perhaps a macro pullback on the first micro or on the hawk, maybe a trend change signal here on the falcon. Need to see a little bit of a retracement first. Tony's asking about the equivolume bars, if I know when they're going to be available. Adam mentioned something about an early release to DTS owners this week, actually. And I will touch base with him to find out. But that was what was going around the water cooler. Okay, just looking for a chance to buy in here. We're going to have a 3-arrow consolidation here in a moment. You could set up on a 3-arrow consolidation. That the hash mark's actually going to print right here. However, because it's a 3-arrow consolidation and not a 4-arrow consolidation, I might leave the entry up there just for now and maybe put the stop loss down here. Okay, now we're into a macro pullback because our micro line is changing color. And a macro pullback we can be a little bit more aggressive on. So a lot of selling going on up here, but it doesn't look like they had, well, there was some support there for the sellers. Okay, so what is it? Oh, it's almost the top of the hour. First day of fall today. Let's see, Jim saying, can you shoot a trend line across there? Absolutely. So we got a trend line way down here. 1, 2, 3, 4. We've got our 4-arrow consolidation, and we've got kind of a trend line like that too. Kai is asking, is that really the Hawk filter you have applied? Mine looks different without the bars inside. This is, it's the same Hawk filter. The programmers have made a cosmetic adjustment somewhere along the lines. I don't usually get the updates. I know it sounds weird, but I gotta pester them sometimes. Hey guys, you think you want to send me an update? None of the programming itself has been changed. Like I said, any changes that have been made have been purely cosmetic. All right, buyers, where did you go? Oh, they're really going to press the short side here. Oh, are they even going to give me a chance to adjust my stop? No. Scoundrels. I'm going to make a run here at my stops. I'm going to get ready because it looks like we're going to get a trend change signal here on the Falcon. Don't you dare. Well, not a fun way to start the day. Now watch the buying come in. Okay, what I'm going to do is I'm going to change this over to a runner. We've got a first micro macro cross. My problem with the trade is the test of the extreme. Right, where can I cover this that I don't get whacked going both ways? I'm getting some questions about these my hawk filter. Um, you can email me. I'll send you my hawk. Oh, wait a minute. No, I can't do that because mine's might be an older one. Email Ben at support at Ben's email is support@indicatorwarehouse.com. He'll get you squared away. Yeah, there's something quirky with the data today. Jim's saying he's having some data feed problems. I don't know what's going on. All right, you see. All right, let's try to short it now. And let's see if we can't make a little bit of progress here. Oh, all right. Thanks, Kai. Kai's just alerting me to a post at the Facebook forum that needs my attention. All right, come on down. I hope so, Jim. Jim says you think we're going to see a test of the morning low at 163.54. That would be fine with me. Come on. Okay, Tony, Tony asks, would you elaborate on using the swing high-low and show exactly where the 5 high-low swing occurs? Okay, I think what you're referring to is the swing high-low stop strategy, which is this one right here. And the swing high-low, what it does is you can gauge the strength by how many bars come into the swing point before it swings. So for instance, right now, the swing high-low says that the swing point was right here. We have it set at a strength of 5, which means there will be at least 5 bars below this swing high. So we have 1, 2, 3, 4, 5. Now if we dialed it up, say, to a 7, that would make our swing point up here now. So at this point we have 7 bars lower. Well, we'll assume it's this swing here. We have 7 bars lower than the swing high. 1, 2, 3, 4, 5, 6, 7, or at least 7 lower. This one might work also. 1, 2, 3, 4, 5, 6, 7. Yeah, either of these would work as swing highs with a strength of 7. If you go the opposite direction, if you want something a little bit more aggressive, say you only want a swing high of 3, so you can see it's highlighted this area now where we have 1, 2, 3 bars lower than this pivot right here. And of course that's going to change if I change the swing high to 4. 4 and 5 are usually going to be the same, as will 2 and 3, or that's why I usually go at least a value of 2 difference. And our trade really struggling here as the market's still looking for some sort of direction this morning. But just bear in mind that the higher the value, the further away the stop will tend to be, because you're going to need that many bars preceding the swing point. And of course, if we do the opposite, if we set it on a swing low, you can see here's the swing low of 5, where we have 1, 2, 3, 4, 5 bars higher than the low point. If I wanted to use this swing low, well, I could either use it manually or I could dial it down. I bet you if I go down to 3, it will give me that. No, it won't. 1, 2, 3. 1, 2, 3. Oh, it should have. What if I do 2? Oops, sorry. 2. There we go. 3. I was clicking the wrong buttons. So here's my swing point of 3 with a 2-tick offset, 1, 2, 3 bars higher than the swing low. All right, we finally got a little bit of relief here on our trade. I could go with a swing high of 3. There we go. And I'll allow it one more little swing here, and then I'm going to go with something more aggressive, just to make sure that the sellers are really there before I start rolling my stop. This is one of these situations like we've been seeing all week where you got to sit on your stop forever. Oh no. Yeah, that's true. Jim said last week he was in a trade for 21 minutes. It just took forever to get to target. My concern is, well, not so much getting stopped out, but getting stopped prematurely. That bothers me more than a losing trade. If I pick the wrong direction, okay, fine. But if I pick the right direction and I get stopped because my stop just happened to be too tight, that really annoys me. And here, you know, for the sake of the $20, I may as well just leave it back where it was. because really the 20 bucks isn't going to break me. All right, so a lot of activity going on at these levels here around this whole 164, 164.05 area. Let's see if that gives us any follow through now. Because I have a bad feeling about this. Let's see what's going on in the other charts. We're kind of waffling across the board here. Oh, they're holding on. This is not good, folks. It's starting to look more and more like they're going to try to make a move to the upside here. It's just the failure of getting short, right? We have all this support. We're kind of wedged, actually. If we can get down below this whole 163.90 area, we should see the market at least get back down here to the bottom end of this trading range. So there we are, 163.90. Let's see if we can get some follow through now. And it's usually at a point like this where I start thinking about getting a little bit more aggressive with my stop strategy. You know, if they're going to fail here, well, then they're probably going to run it up. So I might as well take my licks early. At least that's how it usually works. I know this after just saying how I need to be holding back on my stops. Come on, baby. You can do it. No. No, I'm afraid that we might see a little bit of a reversal here off this 163.80 area now. Oh, I can't watch. Oh, I knew it. All right, so where'd they tag me? 163.92. All right, well, we'll see in a moment whether or not that was a good thing or a bad thing. Hate digging a hole like that for myself, but oh well. Um, let's take a look here at crude oil real quick. We might get a redeeming trade out of crude. So here's crude oil with a red bar buy off of the hard edge. We're still against the ATR, but I can tell from my logic counter if the ATR turns over, I'm going to print a signal right about there. Can I cover it below the lows? No, of course not. So maybe what I'll do is I will keep an eye on the Falcon and the Hawk for crude, which should give me a more affordable alternative. Yeah, we're just hopping back and forth now. All right, so we're getting a bunch of different signals here. Here's a hard edge bounce now. It looks like the eagle is going to try to get up there somewhat. We've got a chance for a second push on this entry also. And our crude oil market is starting to look a little bit more bullish. This is on the hawk now. So we've got the trend change and working on a possible first micro macro cross. Don't have the warning dot just yet, but if you're watching crude oil, it looks like we're going to get a chance there to be buyers very shortly. Just a long time between trades here. And no real follow through one way or the other, which is very annoying. Kai is asking here about the hawk. We just had a little bit of a breakout out of this little sideways range. He's asking, is that enough of a breakout to consider a breakout, or is it still contained within the range? Well, we won't know until the next leg of the move. You could set up, it is a first micro macro cross, of course, which is a higher probability signal. And in fact, I should check this first micro macro cross. I bet you that one hit our profit target before the big reversal. That was foolish on my part. But here's a first micro macro cross signal. What you're looking for when you get these, oh, and we're in the trade, I should have shown you. Okay, we'll do it like this. So here's this little trading range. The market broke out. The question is this a true breakout? Well, we won't know until we see how the market recovers, because remember, on the breakouts, we always get, so there's the resistance level. We get the breakout, and then we look for the retest. Now, we don't want the market to retrace too deeply. That would negate the breakout. That would show us that there's no strength to the breakout. However, if it recovers earlier, even if it dips back below the resistance area, that's usually a sign that there's some strength with the breakout. So we broke it ever so slightly. We recovered relatively quickly. So that would give me some confidence with that first micro macro cross signal. I'm just going to double check this one down here. I have a feeling that that got to the profit objective no problem. That was our first micro macro cross. Yes, it did hit the profit target, then reversed. So that second loss, even though it was a small one, was totally my fault. And if I had taken this one on the hash mark, I think we'd be pretty darn close to our profit target here too. Yes, we would. So it looks as though at the moment we're getting multiple retests of this whole zone. So here's yet another retest. And so far it seems to be respecting that. But on the initial breakout, you cannot really tell whether or not the breakout is going to be strong enough. You need to wait for that retest. And yes, sometimes the market will just take off without you. It's rare, but even if it makes a large move, Like let's say, here we're going to close this out. Let's say we were watching this area right here. And you kind of see that the market is struggling and it's coming lower. We don't really have a signal at this point, but let's just watch what happens. So there's the breakout. And by now you're thinking, oh, why didn't I sell it earlier? Well, don't worry, because here's your retest. It's not as big a retest as we would normally see, but here's your retest, your first micro macro cross signal. You could probably trade at something like that. And there you go, right? So you usually get at least one, maybe two opportunities to take advantage of the breakout. Here's another one. Let's say we looked at this and we were watching. And this retest came very quickly, but let's say you missed that. And by now you're saying, I missed the trade. Yeah, but watch what happens. It comes all the way back down here. Oh, and then you get another bounce. Right? So even though it took a very long time, it came right back to that support area and gave you yet another rally. So it's rarely a lost cause. It just depends whether or not you can wait it out. So here our first micro macro cross signal. I should have taken it right on the hash mark. We hit the profit objective. I think that's what I'm going to do today. I'm going to stay with what works. Don't get cute. I'll be all in, all out. Got a little bit of work to do today anyhow. Try to get my act in order here. Yes, Joe, words of wisdom from Joe here. Trading is a game of patience, and it certainly can try your patience. There's so much variation in trading too, right? There's so many ways to skin the proverbial trading cat. We can day trade, we can end of day trade. I know traders that are very long-term traders. They're looking at weekly charts to place their positions. There we go. We're finally getting a little bit of follow through on the signal now. So these tails on these bars are encouraging because it tells me that there was some selling going on, but the buyers took it back. So they're making a run now at the highs of the day or of the session so far. The soybean market is in a coma, and crude oil, for the most part, is still really range bound. I know I was looking for a buying opportunity. Here's the Falcon. But if you kind of take a look at this with a bird's eye view, no pun intended, you can see that we're pretty much sandwiched here between the primary resistance and the next resistance area. We are working on a trend change signal here to the upside. Right now we just have the warning dot, so I'm not going to get too excited with that. And it looks like we finally found a directional trade here. Oh no. Joe said he had a buy limit order in at 45.53. So that would be on what, the NQ you were watching, 45.53. Came within one tick and turned to head higher without him. I feel for you. I really do. Wish I could say it's never happened to me. You can take a little comfort. I know it's not a lot of comfort, but you can take a little comfort in that you were right about the trade, about the direction. All right, I'm going to get a little bit more aggressive here with my stop now. Try to hold on to some of that open profit in case we get a, oh, it was on crude oil. Oh, heartbreaker. Yeah, that's always the challenge. When you're trading with limit orders. Okay, we're up against a little bit of resistance now, or getting close to some. This 164.50 area. Come on. Okay, I'm only going to give them one bar to behave. There we go. Get up there. 48, 49. Oh! Nobody wants to take 50. Joe, I need you to get in there and buy up a bunch of orders at 164.50. You know, whatever you can spare. 10,000 would be great. Joe says, here I come. Oh, there, thanks, Joe. You're a pal. All right. Well, I was starting to think that we were going to hold up there a little bit at 164.50, but we did break through, hit our profit objective, which was nice. And yeah, Jim says the next resistance line is 164.58, which it is here on our support and resistance suite. And now that we've encountered that, we might see them slow just a little bit, but that's okay. Soybeans are in a coma today. Might throw the British pound up, see if anything's going on there. Oh, they're still pressing. They're not done. We've got quite the little island of trading going on here on the Geiger counter. Little pop there on the buy side. You can see how they kind of overwhelmed the sellers, who got a little bit lopsided. Oh, okay. News to me. Mark says he contacted Ben, and Ben says you can turn on those vertical bars here on your filter. Status. I'm assuming that would be that bar there. Maybe not. Trend coloring, falling, rising. Okay. I had mistakenly assumed that it was something new that was done. A lot of times, you know, with the trading room and everything, it's a little bit of a challenge too to remain patient because, of course, well, we've got a trading room going on. We should be trading. But a lot of times, the market needs a good half hour, 45 minutes to kind of get its bearings. And today, it seems it was no exception. I think I've shared this with you guys before, but a lot of times when I'm trading, I'll I won't get into the office until 7 o'clock. And yes, sometimes I will miss a rather substantial move out of the open, but a lot of times, like I say, the market just needs to get some structure, and you can chase your tail around. Yeah, that's a nice analogy. Joe says it's a lot like a plane taking off. That's true. You got to build up some momentum, and then, of course, you get enough airspeed. So it almost looks like we had a little bit of a blow off here on the highs. Let's take a look at the eagle. It's the most pronounced. When you get really, really wide bars like this, that tells you there's a whole lot of volume. And a lot of times if there's no follow through on that, that tells you there's going to be a heavy, heavy resistance area there. This is sometimes a little bit more evident, say on a time-based chart, if you're watching, say like a 5-minute chart, and you get these, well, the real squishy bars that are, this isn't one here. If this tail were a little bit shorter, it would be. But if you get a bar that forms, it looks, oops, there we go. Really fat like that and just doesn't go anywhere. Say it has a tiny little wick on the top or something like that. I should have used a different color background here, but you get the idea. You get a really fat bar with these equivolume bars. That shows you a whole lot of momentum that's not going anywhere. It tells you the buyers and the sellers really fought it out, but neither the buyers nor the sellers gained control. So if it were at the end of an uptrend like this, that's actually quite bearish. And what you would look for after that is you would look for the market to come down a little bit, and then it would come back up here and retest this zone. But the next time this bar forms, it would be just a tiny little thing like that. And that tells you that the buyers who try to recover the market here have no momentum left. And at this point, you'll very likely see the market make a very steep decline. It doesn't show up quite as fat on a range style bar like the mean Renko bars. The principle is still the same. You can see that some of these bars, in spite of the range, are still wider, but sometimes you get some really fat ones on a time-based chart. Okay, coming into a little bit of a macro pullback phase. I'm going to look and see if we can't get a little bit more of a retracement here. And crude oil has since put in a decent little rally, especially off of the hawk. Nothing to get overly excited about, but still enough to find our profit objective. There was the first micro-macro cross signal right there. Gave you a little bit of heat. I'd probably cover to the macro line anyhow. And you can see a nice little progression there. Found our first profit target. Well, what the hawk was our only profit target. We'll just camp out here for a bit, see what they give us. A little bit of a retracement after a rally like that would not be out of the question. Look at this. Whole lot of buying going on. We had a little macro pullback here. We do have a trend line touch signal getting some support off of the secondary resistance line, and we have a chance at a second push on this entry. You could set it up something like that. Come on. Well, this may turn into a late filter entry signal yet. If it doesn't materialize soon, normally once the signal starts printing dots against it, I'll cancel the signal and wait for the next signal. Jim's watching the Russell. He says there's some divergence going on. The Russell hasn't followed through with a new high. Okay, so here's our 4-arrow consolidation now. And we normally anticipate some follow through on the 4-arrow. So we've got 1, 2, 3. This is our fourth signal. And it looks like there was some participation on this bar. Let's see if we can't get it to rally on up there a little bit. Of course, this whole level at 164.75, the big stumbling block. And you can see I'm not giving the trade a whole lot of room. Good question from Kai. Kai is asking, do you consider that it's the daily high? Well, yes and no. Obviously, the current high of the session is significant, but if the market never broke the high or the low, it would, in 2 days, it would be a flat line. So no, I give it the respect that it's due, but I don't stand aside from a trade simply because it's the high of the day. When this signal developed back here, this was the high, right? That was the high of the day right there. Then we printed a first micro macro cross signal, and look at what happened. So here we are essentially with the same type of situation, macro pullback, 4-arrow consolidation. Ideally, I would want to keep my stop deeper, right? Ideally, I'd like to put my stop way down here. That would give me a whole lot more staying power. But, I structured the trade a little bit tighter, looking for some support off of those lows. I'll give it one more bar, and it may well dip low enough here, and that's the challenge with placing the stop in the way the market is on a day like today. No, they're going to spank me again here. Scoundrels. But that's a very good question. That's a very good question. Thank you for asking that, because I know a lot of people worry about the trading into the highs or the lows. And I try to focus more on the validity of the signal. And what I should have done here, what I did wrong on this particular one, is I framed the trade too tight. So there was our 4-arrow consolidation. Where was it? Right about here. I should have set the stop much deeper, like that. Because the buyers are active, right? The buyers have made a significant effort to rally the market. They're not going to walk away from the market. It's very unlikely the market's going to make, a full-blown reversal without the buyers stepping in here at least once to try to prop up the market. And once the buyers, let's say the sellers take the market down all the way to here, which would be, kind of this retest area. And then the buyers finally show up and start to rally the market. Well, at this point here, I know, okay, the buyers are there. Time to start rolling my stop, right? And then the market might do one of these. And then I can roll my stop a little bit more. Then it might do some of this. And even if it stopped me out here, you can see it would still be less than what I initially had at risk. But chances are, if the buyers are really serious about recovering the market, they're going to do something like this, where I get the chance to minimize my risk exposure, and then maybe somewhere around here, the sellers, because we're getting closer to the high, if the sellers try to recover the market, okay, I could get stopped out here. And after this, we may see the sellers drive the market lower. But that's the challenge with today's trading, is keeping your stops out of harm's way. And it's almost the kind of session where you should just take a onesie. Like, here's a macro pullback, just throw the stop. Oop, that's a little bit too far. Just put the stop way far away, as far away as you can manage. Oh, come on. They're going to run away on me now. As far away as you can manage, and just give the market as much breathing room as you possibly can. Yeah, Jim says the DAX is getting weaker now. I think we're going to see prices kind of waffling for the most part today. That's kind of been the modus operandi, if you will, of the stock market of late. Folks, I'm going to need to shut up the room here. I've got an appointment I need to go to at the top of the hour. If you're trading this afternoon, believe it or not, I'm still bullish on the market. I think we're going to see a little bit of a retracement here, possibly another run higher. I don't think we're going to see the market skyrocket, but they're very much in a buying mood right now. So I think I would favor the buyers over the sellers at the moment. I'll see you again in tomorrow's room, bright and early. All right. We'll talk to you guys then. Bye for now.